Hey, rich friends. So today is going to be part one of our Sunday session for March 30th, 2025. I just want to let you guys know that it is NFP week. So I wanted to use this class to give you some refinement techniques when it comes to your strategy or things you could be looking for, specifically because one is NFP week, and two, I noticed that everybody has different indicators on their charts and everybody trades differently. So I want to focus more on things that can apply across the board in trading. So like more, I guess, fundamental things. So we're gonna look at what happened in Euro USD. And I guess this could also be a class in is this a retest or is this a reversal? Because sometimes we don't know, like, for example, with gold or anything. It could be extremely bullish, but we don't know if it's going to continue being bullish. So we get scared to get in and then we miss the rest of the bullish move. Like if that's ever happened to you, drop a seven in the chat because that definitely happened to me at some point last week with gold because I was like, oh no, I don't want to get in. Oh no. But then I just was like, let me just get in and trust what I'm seeing. Um, and it played out pretty good. So one thing that we want to pay attention to, especially if we are incorporating break of structure into our trading strategies, is not only do we want to wait for the break of structure to confirm that the trend is changing, you also want to wait for the retest. Now, the retest is exactly what it sounds like. It means that the market's had a break of structure and then it's retested that level again to see if it's going to continue. So that is what I have notated here. Now we can see that the market was actually consolidating for some time here, right between these levels. Consolidation just means that the market is not really breaking out of a specific low or a specific high. It's literally ranging in a zone. So if you guys can see that the market was consolidating here, it had a hard time getting any higher and it had a hard time getting any lower. So it was ranging right between these two prices. Just drop a seven in the chat if you can see that. Now, we are all familiar with break of structure. The break of structure literally means that, yes, we saw that the market was consolidating, but eventually we had a break of structure to the upside, literally meaning that it could be on the upside or the downside, but in this case, it was an upside break. And that was the first confirmation, okay, that the market could maybe continue to go up. So you can ask yourself, has the break of structure happened yet? And if the break of structure has happened, that could be a sign that the market is going to continue a trend. But to take it even further, you can ask yourself, has the market retested this area? Now, the retest is an extremely key point into confirming is the market going to continue the trend? Because not only did it have the breakout, right? It broke out of that range that it was in that we agree we can see here. And then the next time it came back down, let's look at this red candle here. Previous support, previous resistance, right, which is a place where the market is selling, has now become support. So we had a break of structure. And this is why patience is important in trading because you may see a break of structure and that may be like, okay, that's the only thing you're using. But you can make sure you have as many entry signals as possible to confirm that the market is going to go that way. So not only did we have the break of structure, we also have the retest, meaning the market didn't come back into that previous zone. We now have a new level of support and it's going to buy until we reach a new level of resistance. And if that makes sense, break and retest. And I'm going to show you guys an example of a fake out as well, because we can have a true breakout, which consists of that break of structure, either up or down, and then the retest as the previous something turning into something else. Um, so if that makes sense, and you can see that there, just go ahead and drop a seven in the chat. So that can be a way that you refine your trading and just add that to your additional questions that you're asking yourself. Has there been a break of structure? Yes. Now, another question you ask yourself, has there been a retest? Cool. Now, we see another example here. I'm going to give you a more in-depth sell example, but we can see that the market was consolidating here, right? You guys can see that consolidation because it's selling at a certain place and buying predictably. Just drop a three in the chat, right? And then we see the break of structure. And then we see the retest, and then we secure a little bit of pips. Now, granted, it didn't go down, but we had everything that we needed a little bit to go in maybe for a short sell. But if we would have looked at additional things like our stochastic, we can see how possibly it could contradict. And I'm going to show you an example of that as well. Like, because I want to show you real examples of things that could happen in the market and what you should be looking for. So that's one thing, breakup structure and retest. Now, another way we can confirm that this was actually a bullish trend because the market, I believe, was selling for some time. I think we were in a sell last week, right? Is that, and I've said this in other videos, but I'm gonna say it a different way today. So if you see more blue candles than red candles or green candles, if that's what's on your chart, that's a buy confirmation. If you see more red candles, that is a sell confirmation. Specifically, you want to look for three candles, right? If three candles are going in the direction of your trend, that is a sign that the market is building momentum and there's a potential that it's going to continue to push that way. Right. So maybe if you aren't currently looking at candlesticks in your analysis, look at what's happening with those candlesticks. Is it building momentum in the direction that you are finding other confirmations, or is it starting to become a little bit finicky? Right. And here's another break of structure and retest. If you guys can see that break of structure from this range, right? Break of structure, retest, right? If you can see that, drop a 7 in the chat. Because the more that you can recognize these things, whether you decide to use indicators or not, the simpler your trading will be, right? If you understand what's going on in the markets and how many signs that you're actually getting into what's going on, it's going to remove a lot of that anxiety because the data is telling you everything that you essentially need to see, right? So not only that, just looking at this whole bullish move and the time specifically, I believe this was around 7 a.m. I think I started at 7 a.m. here. At 7 a.m., that's considered pre-market, right? The market doesn't really officially open until I believe 9:30 a.m. on Tradingview. During pre-market, we can see that there was a bunch of indecision. And this is another question that you want, or you can add it to your list of questions that you ask yourself. Has the market hit a floor or a ceiling? Right? If it's hit a floor, you're going to see that the candles are not going any lower, which could signal a sign of reversal. Same thing, if the market has hit a ceiling, that's going to be a sign that there could be a potential reversal to the downside, right? Not only that, you want to look at what's happening with the candle bodies as well. And again, this is just highlighting more things that you could add to your analysis. So here we see three red candles, right? We confirm that the trend is going to sell, continue selling, but then we start to see that there was a strong selling momentum. Then we had a blue candle here, right? So we start to see the sellers actually losing steam, and you can see that in the shape of the candles. And by losing steam, I literally mean that the selling candles are getting smaller, the buying candles are getting bigger. Right here, we have the sellers. We can clearly see they tried to push, but then we see the power. You literally see the power being transferred to the buyers in real time. You see retaliation from the sellers, but then you see now we're starting to get more blue candles in a row than we're getting red candles in a row. Right? So that's something, if you take nothing else away from this, think about how many candles in a row am I seeing? Because the reason why we get things like consolidation, right, or ranging markets is because look at this. Do you see any series of like, do you see three candles in a row or three blue candles in a row, like consistently to confirm the sell? Right? We really don't see it. And that's why we get the market moving back and forth like that because there's no serious momentum in either direction. The market is actually quite indecisive until you get a big institutional move, which we'll hopefully get a chance to talk about today. So when you're doing your analysis, you can ask yourself questions like, again, has the market hit a floor or ceiling, or is the previous side running out of steam? Like, can we see the transition of power from the sellers had some strong momentum? We see it getting a little bit of flaky. We see it getting flaky here. And then we see the buyers building up momentum, right? You guys see that? Drop a 7 in the chat if you can see that, right? So all of those were signs that the market was going to buy starting in pre-market. It actually picked up momentum when the market opened. 9 whenever the market opens, whatever market you decide to trade in is usually a really nice time to get in. Then of course you have your entry confirmations, which we just collected a bunch of confirmations to say, yes, the market is going to change. But what is your signal to get into that trade? For me, my entry signal to enter a trade is on the stochastic. It's the indicator that tells you a lot, right? It doesn't really tell you about volume, but we can figure that out by the candles. The larger the body of the candle, the more people are in that trade in that way. But the stochastic tells us about momentum. And when we see the blue line above the orange line, that's usually a sign that momentum is going in the way of the buyers, right? And then when we see the orange line on top, the momentum is in the way of the sellers, right? So if this is making sense so far, guys. Just go ahead and drop sevens in the chat, because these are all additional things that you can be looking for in your trades. So in this case, we would have had the entry signal on the stochastic. In addition to, we see the sellers are running out of steam. In addition to, we see the buyers picking up steam. In addition to, we have the break and retest at a previous level, right? In addition to three blue candles in a row. So that is a clear buy. And as we can see, the market actually played out that way. Now, some of us may be impulsive or rushing into our trades. For example, if we were in the market right here, we could see this as a previous area of resistance. We can see this as a new area of resistance, right? Because that may be a way that I maybe would have looked at the chart in the past, because I would have said, okay, the market is consolidating. That's resistance. The market is creating lower highs. And I would have probably entered for a sell. But once I would have used my additional confirmation on the stochastic to say that momentum is actually picking up for the buyers, I probably would not have entered for a sell, just because I had that additional question on my chart. Now, again, I know everybody doesn't use the stochastic, but whatever indicators you have, make sure you're back testing it so that you can have the appropriate confirmations that you need for whether the market is selling. Now, I'm just going to scroll as I like to do to show some examples. Again, if the blue line is on top of the stochastic, that is a buying confirmation for me. The very best time to enter. I love when I catch the stochastic right when it's crossing above, because as we can see, that's a really good entry, right? Whenever it's right crossing above 20 and that blue line is on top, that would have been a perfect entry to catch this entire move, right? Now, I'm just going to scroll. We're going to look at these other examples too, but I'm just going to scroll, and I just want you to look at the stochastic when specifically it's crossing above 20 and the blue line is on top. And as I'm scrolling, if you can see how those two things correspond with bullish momentum or buying momentum on the candles, right? Just drop a seven. If you can see, enter once it crosses above 20, right? We can see how that corresponds to bullish momentum on the chart. Here's another perfect example, right? It's like perfect. You get it at that level of support. You get it when it's crossing up. It's like a really good entry. So for me, if I know that momentum is important because that's what carries the market and allows it to either keep pushing higher and higher or lower and lower, I'm going to use a strong momentum indicator, right? You can use the regular momentum indicator, but I find that the stochastic gives me so much more information. Like it just gives me so much more information. And for people who are using the free version of TradingView, you can get away with using one indicator that tells you just as much information as four or five different indicators. Um, and then the same thing, I'm gonna scroll, right? I'm gonna go back the other way. I'm gonna scroll and I want you guys to look at when the stochastic crosses below 80 at the top. Once you get that cross down, and the orange line is on top, I want you to tell me if you see how that is a good entry for a sell. And if you do see that, you can drop a seven, right? We see here, we see another example here. That would have been a really awesome entry for a sell, right? And again, you don't have to be in for the whole entire move, but you can secure your pips or you can even wait. because somebody might have stayed in this trade from here to here, right? From 109.16 to 108.61, which is about 50 or 60 something pips. Cool. But do we see how the market continued to drop because we had a break of structure, right? And then we had the retest, break of structure, right? It was buying at the same place for a while. It was selling at the same place for a while. We had a break of structure to the downside. We had a retest, right? We had a retest. And then the market consolidated and then it continued to sell, right? So that is how I like to use the stochastic for momentum, and it just confirms like this was a really good buy example. This really just confirms that it was a decent trade to take. Every trade is not going to be right, but the more confirmation you have that something's going to happen, you're managing your risk, right? Tom Huger, who wrote The Best Loser Wins, said you cannot control your rewards because you don't know how far the market is going to go. All you can do is control your risk. So if you have what people like to call a high probability setup, which means that it's more likely to go in your favor than not, then just take it, right? And if you're using proper risk management, meaning, say, for example, for this buy, if you would have entered your buy here and your stop loss would have been here, that's because it's just this previous shelf right here. That's only 6 pips, right? Or you can do it below the previous low. That's only 13 pips, right? So a way that you can set your stop losses and take profits is really just use previous levels. If you are still struggling with how to use the trailing stop loss, use previous levels, right? Because the market is literally made of patterns. So it's going to repeat itself. So let's just say we enter for our buy here, or we enter for our buy here, our stop loss will be here. As the market moves up, your stop loss is here. As the market moves up, creates a new support here, your stop loss is now here, right? So you're moving your stop loss into profit and you're just using those previous levels. And as we can see, because this is already played out, your trade would have not hit stop loss and you would have been trailing by 20 pips, right? So you're not stressing yourself out about where do I put my stop loss. You're not having a super large stop loss for the market going 1 pip into like almost hitting your TP and then coming back. It's like you're using actual data that you're seeing on your actual chart to monitor your trade, right? It's so much easier to trade what you see versus trading what you want. I lost so many trades being like, especially on gold when I was learning to trade gold better last year. Like, oh, well, gold hit this level. It's definitely going to sell next. No, I don't know where the next highest high is, right? All I know is what has already been done and what's been shown. I don't know where the market's going to go. Like, I'm pretty sure there was somebody that has been in gold since it hit 2,900 and they rode it all the way up to 3,058 in one trade just because they didn't know where it was going to go. And they didn't limit themselves by setting a TP, but what they did do is manage their stop loss using previous levels of support and resistance that were being broken, right? So yeah, trade what you see, not what you want. But guys, this video is actually going to be ending in about 60 seconds. I do have more examples that I want to show you, different ways that you can look deeper into your charts to avoid these common mistakes because they're so common. So if you want me to continue, just go ahead and drop a 7 in the chat and we will open another link in about 60 seconds. All right, awesome. So I'm going to stop this and you guys can re-enter and I will see you shortly. Hey, Retren. So this is going to be part two of our refinement and our analysis. So we were looking at Euro USD, and in the previous video, I was explaining how we could have looked really deeper into this trade here to see if there was anything that can improve our entry for anybody who took a buy for Euro USD, because I know a couple of us did. Now, our second example is here. Um, It says I'm breaking up. I hope not. Our second example is here. And this would be an example of a fake out. This is not a true breakout, even though we did have a break of structure. And I'm going to explain why. So this may happen to, or this may have happened to you before, where you got into a trade using the break of structure, but then the market actually didn't continue in the direction of the trade. And you were probably confused because you got the true break of structure. However, your trade still ended up hitting stop loss. If that's ever happened to you, just go ahead and drop a 7 in the chat, right? Now, this happens when there is a fake out, and how you can differentiate a fake out from a breakout is yes, you will have your break of structure, which we can see here, but if we actually look at the very next candle, this candle opened here, right? So this created a double top, or what we like to call a tweezer top. And a tweezer top is when two candles, basically this candle, this was the high, this was the high, this was the close of this candle because it's a buying candle, this was the open of this candle. If the very next candle does not open, right? If it's buy, if it doesn't open higher than the previous candle, or if it doesn't retest this level in a positive direction, it's a fake out. It's not a true breakout. Because in order to break out, it would have to break out. And then remember, what's the next thing that would have to happen in order to confirm the trend? We're looking for a breakout and also a somebody drop it in the chat. No, not a lower low. Yes, Alicia, it will be a retest. If this market was truly going to continue in the direction of the buy, because we had this consolidation here, right? And I actually marked that the time that this was again around, I believe it was around 7 a.m., right? Because this was pre-market. So let me just get my notes right here. So this was major indecision during pre-market. And not only that, if we actually zoom out, this is our session break. This is the previous day's high. Once we get to 9 a.m., right, 9:30 when the market actually opens, we're getting rejections off of that previous day's high, right? And actually, I think it was Latanya. Actually, we have the break of structure here, but then here we're having a rejection off of the previous day's high. And if you've seen pretty much any of my videos, but more so the recent videos, focusing on the previous day's high and the previous day's low, and what actually happens at that time will help you determine which way the market is actually going to go for the day. Because we can see that this market consolidated and then it sold. It didn't officially come up until much, much later. So you would have been in this consolidation all this time. If your stop loss would have been at your previous low, you would have got taken out, and then the market would have continued. So this is a fake out simply because the second candle after the breakout did not positively retest in the direction that the market was going. Not only that, I also looked at the stochastic, and we can see on the stochastic that the orange line had actually crossed over the blue lines. So we would not have had strong bullish momentum, right? Does that make sense all the time? We could have just looked a little bit more deeper into our analysis, and we could have gotten additional confirmation from our indicators, and then we got additional confirmation from the candlesticks, and then we also got additional confirmation from the pre-market consolidation and rejection from the previous day's high. Now, again, this is not to confuse you guys. It's just really to make sure that you're actually doing a thorough analysis, because the market always makes sense in retrospect. Like you can, if this has ever happened to you, if you've ever looked at the market after the fact, you're back testing and you're like, duh, this makes so much sense. You can see it after the fact. Drop a 7 in the chat. Because asking deeper questions and asking more thorough questions will help us to have more like foresight than hindsight. And that's what I want you guys to have, more foresight than hindsight. Can I show an example of a positive retest? Yes. Here. The very first example that we had was a positive retest because we had the break of structure from this previous high here. And then the market never, it continued in the direction of, like, I don't know if this candle opened blue, but I know that it opened higher than the halfway point of this candle. Um, and then it continued to go this way. Here's another positive example. We had a break of structure here, and then we had the very next candle continuing in the direction, opening, basically pushing price higher and higher. And I have a positive retest sell example too, but I just wanted to show you guys a fake out because it's easy to get faked out in the market. Like every trade is not going to go your way, but if you know how to spot these things, then you'll do better. So here is a sell example, right? We had the market consolidating here, and this was a huge range of consolidation. That's crooked, but whatever, right? We had the market ranging here. We actually had the first break of structure here, right? We had the break of structure here. It got up to the halfway point, and we can see that. What can we see here, guys? Previous support becoming resistance on this candle here, confirming the selling trend. So this actually answers your question too, Vanessa, for a example of a positive retest. You get a break of structure, you get a one here, you get the retest at the previous level of support, but then even here, you get a break of structure, and then you see price is just retesting right here, right? It's retesting, you get a huge rejection, it's just retesting red and going in that direction, and it keeps going down until we start to see the sellers running out of steam here. They tried, they tried. Power is switched to the buyers. We also get the confirmation on the stochastic. Market goes up. So even with this sell example, we can see that we got the breaker structure and retest, and then we can see that the stock here was where it actually crossed below 80 because the significant levels on the stock are 80, 50, and 20. So here it crossed below 80. That corresponds to these candles. So we could have entered for a sell here. We see the 50% line. It doesn't go below the 50% line, right? It stays. We have some positive push from the buyers, but then we have the break of structure here, and the market continues down to actually cross below 50, hence why it continues to sell here, right? So again, this is just about looking into things a little bit deeper. Um, this is going to be the last, I believe this is the last example. And then we're also going to talk about one new, it may be a new concept to some people, it may not, but it's something to consider when you're in your trades, right? So here is a sell example, and we're just looking at all of the indications we have for a sell. Granted, it's after the fact, but these are things you should be looking for in your trades. So first and foremost, we have a clear area of resistance here, right? We have the market was on a buying trend. It resisted, came down, supported, came to the same level, resisted, right? So that's one, two, three, four rejections. I like to see at least three. We see that the market can potentially be going down, right? We also see that we have one, two, three red candles here. So that could have confirmed your selling trend. But coincidentally, where the three candles are, we have a break of structure on the 15, right? We have a retest of this low here. So three candles, momentum on the downside. So that's something we could have noticed. Like, wow, we see that the buyers are clearly running out of momentum because there hasn't been a blue candle for a minute, right? But we see at first the market was ranging here. And then what happened here? We have a break of structure, and then we have a retest where support becomes resistance, right? If you guys are seeing this, just go ahead and drop a 7 in the chat, right? Because a lot of us understand market structure, but we still get confused as to what's going to happen once the market breaks structure, or is the market going to continue this trend, right? We get so confused and we get so spooked, and then we just guess, and then we take half confirmations when we can just look a little bit more deeper to see what's happening, right? So not only do we have and remember, I think I told you guys recently, well, I brought it up recently where it's certain things you want to look for in every trade. You want to look for the momentum, you want to look for the trend, right? So the stochastic is telling us the momentum, the candlesticks are telling us the momentum, the candlesticks are telling us the trend, the direction of the stochastic is telling us the trend. Um, so another thing that you can look at, and this is, I promise you, this is going to be so helpful to someone, is understanding what is a fair value gap. We've talked about gaps before and how they're filled, but I want to hopefully make it clear in this session to you, and I want you to really backtest it and to really incorporate it into C. And then also, just to throw in there, we had the signal on the stochastic in addition to that momentum, right? So all of that was a really cool setup for a sell. And if I zoom out, right, I can see that if I would have set my first TP at previous low here, TP's hit, right? But we're going to talk about a fair value gap because a fair value gap happens when there is a institutional move. And that whenever you guys see a really big candle like this, whether it's on the downside, upside, is for buyers or sell, there's usually going to be a gap between the previous candle before it and the candle that happens after it. This literally means that the seller's momentum in this example moved so fast that there was literally a gap left between the previous price and the next price. That's not cool. And the market always has to fill in the gap. Now, in order to fill in the gap, the market will go back into that area and then it will continue the way it was going. So to see the fair value gap, you literally, it's a three candle pattern. There's a gap between the first candle and the third candle between the long candle. You can put a box between those, right? And you want to touch the top of this wick and the bottom of this wick. Now, what will happen is the market will always come back to fill the fair value gap. And once it comes back into that zone, you could enter for a sell, right? You could enter for a sell any of these places because it's rejecting off of that level. But it had to come back up because it had to fill this gap, right? It literally had to fill the gap. And you will find fair value gaps on every single time frame. If you see that there is a gap between a first and third candle, the market will always revisit that area. And then that can be where you enter, right? And we could have definitely secured some pips in this fair value gap. And I'm gonna see if I can find another example because it is like once you see it, you literally cannot unsee it. Okay, so here's another good example. It's like literally once you see it, you can't unsee it. So firstly, before I get into that, do we see how, let me get my pencil. Do we see how there is a gap between this candle and this candle, right? Do we see that? Drop a 7 in the chat if you can see that. So we see that there's a long candle. We see that there's a candle before it. There's a candle after it. There's also three red candles, right? Just remembering everything we just discussed today. Now, you can use horizontal lines for your gap, or you can use a box. I'm going to just use a box, right? And what you want to do is from the bottom of the wick to the top of the next wick, you literally just want to have a box. And we can see within 30 minutes, because this is the 15-minute time frame, the candles pushed into that box, and then the selling trend actually continued. Now, understanding the fair value gap is so important because the market has to fill those orders. Remember, the market literally dropped so fast that there was not enough time for people to actually enter the trade. So when you see the market retesting and coming to certain levels, it's probably trying to fill a gap, whether it's from the previous candle or the previous days before, because we have talked about gaps before. So it's just really a matter of just understanding these things and knowing what to look for. I will try to find another example because with a buying, here's an example right here. And I'll use the horizontal ray this time, right? We can see that this is a huge candle, right? So we're going to go here. We're going to put a horizontal ray here. And we're going to put a horizontal ray here, right? Because there was a gap that needed to be filled. Do we see how price literally pushed back into the next candle? And that was a confirmation, at least for a little bit, that the market was going to go up. So that's still a good 20 pips. And I can just do so many examples of these because it's one of those once you see it, you cannot unsee it things. If there was a gap from this candle to this candle, right? The market, well, it eventually came back down here because it still had to fill the gap, right? But eventually it came back down and price pushed back up. Right? Yeah, they're really good for pending orders. Here, this probably would have been a missed opportunity because it didn't exactly come back down. And again, you won't find a perfect setup every single time, but once you see it, you can't see it. Here's another example. Let's look at this huge push up. We see the top of this wick here. We see the bottom of this wick here, right? We see the market did a bunch of stuff. We see the market came back into the fair value gap, right? And then what happened? Price pushes up. And not only did price push up at the once it filled in the fair value gap, it was also at the 50% line on the stochastic. Right? Now remember, if the stochastic crosses above 50, blue is above orange, all of that stuff, you guys know. It pretty much is it's a given. So again, these are just additional things that you can look for. I'm going to delete this line. I'm going to do another example right here. You just want to make sure that the wicks are not overlapping. And if they are overlapping, it's not a true fair value gap. So that's not really a good example. But I'm pretty sure you guys are getting what I'm saying. And it's the same thing for a sell as well. Here's an example where we have this wick did not overlap. As long as the wicks don't overlap, it's a fair value gap. We see these wicks did not overlap, the first and third. We see price push back up into the fair value gap. And then look how long it sold. Right? Look how long it sold. And then as price pushes down, you just are finding new gaps because from it'll be one from here to here, right? Price pushed back up into the gap. Not only did it push back up into the gap, you're getting those strong positive rejections, right? If this is making sense, y'all, drop a 7 in the chat, right? Because I just want to show you guys as many ways as possible to just look at the market and to be as thorough as possible in your trades. Is it good to have your trades in from the weekend based on your study, or should you wait until the market opens? Um, Honestly, I would say the only time that you should probably revisit it like is on Sundays when the market reopens because sometimes you have those really huge gaps in the market. But once you start to mark your charts and take notes, you'll see what the market is doing based on your previous notes. Like I think I was saying this at the beginning of the first video, like you can just revisit charts that you've already marked up and make new notes, right? Do an example of a pending order with a fair value gap. Okay, that is a good question. So let's just say that we were looking at, let me find one. I need something that's clean now. I hate too much stuff on the chart. Let me, I will find one for you. And then next time we'll talk about fair value gaps and liquidity and how those things just play together. Okay, this is actually a really good example. We're gonna go here. So let's just say we were in the market at this time. Let me just delete this. So let's just say we were in the market at this time, right? And we see that we have this gap from here to here, right? We see the gap because we see that there is a huge blue candle, and we see that the previous candle before it and the previous candle after it do not connect. Right? If you guys can see that, just go ahead and drop a 7 in the chat. You can see how this wick and this wick are not connected. They're not touching, right? Now, if you were to set a pending order, now instead of just getting in on the breaker structure up here in the retest, you would wait because you know that there's actually a gap and you would set your pending order. The best place to set a pending order if you're going to use the fair value gap or smart money trading strategy is to use the previous high, right? So if you would have set a pending order here for a buy, you would have been in profit, right? You would have set a pending order here and your stop loss would have been at the previous low of this range, right? Your trade would have triggered because look, this red candle was probably another institutional look, 7 a.m., right? The important time to trade. This candle came down only to fill the fair value gap. So when you guys start looking at wicks and fair value gaps, and if that's something you want to consider your trading, this wick would have triggered your trade. It would have never hit stop loss because your stop loss would have been here, and it would have went up, right? You would have secured all of this profit from this entry all the way to there or whenever you decide to get out. And that was in 1 day and 6 hours. That's 133 pips, all off of a simple fair value gap trading strategy. Um, yeah, all off of that, right? If you would have got in here, if you would have got in for the buy right here, and you would have set your stop loss at a previous low, well, if you would have got in here and set your stop loss at a previous low, you would have got stopped out by this candle coming to collect liquidity. Well, Italian wick shouldn't scare you because I'm just going to scroll and I want you to see how the wicks are literally, and I have a video specifically on liquidity sweeps and big wicks like that because they just serve the purpose to fill in the gap real quick. It really just serves the purpose to fill in the gap real quick. So let's see if I can find another example really quickly. I'm gonna take all these notes off. Eh, it's recorded, so I'm just trying to look for a big wick and which is like well, we just saw a really good example of one, like a clear liquidity sweep. Okay, here is I don't know if it ever came back up here. Here's an example of one not working out. Yeah, that's not a good example. Well, you would just have to when you see it, you will definitely see it. Let me see, it's here. Okay, here's a good example of a sell with the wicks being used specifically for liquidity. So we have this wick and this wick not overlapping. And what time is this? 3:15 a.m., 3:30. That's London session open. So from this candle, and I could just zoom in some. From this candle to this candle, we see that the wicks did not overlap. So when this candle comes in with liquidity, that wick is literally just to fill that gap, right? That wick is just to fill that gap. So we get rejection off of there, and then the market sells. Once that gap is filled, essentially the market doesn't really have to do that again. Here's another example of a gap that had to be filled from here to here, right? This is another example. We see this, and this looks like a Sunday to a Friday, Friday to a Sunday, because it's usually a gap. Certain days are like gap days. So we have the top of this candle, we have the bottom of that candle, we have this candle coming back into the zone, and then we have a buy, right? In addition to the stochastic coming at the 50% point. So I've told you guys this before. Gaps will always, always, always be filled. It's just a matter of when. But it does happen more often than you think, right? Do you do TradingView tutorial videos? Yeah, I have so many videos on YouTube, y'all. Like it's like so many videos. Let's see how many I have right now. One tip from All right, so this is my YouTube channel. For anybody who's curious, I have 374 videos. My videos are organized by playlists. I say this all the time, and I upload currently on Tuesdays, Wednesdays, and Thursdays. Every trade I take, I do a breakdown. But if you want to find my TradingView tutorial videos, you can come to my channel. You can click playlist, and then you can click the TradingView for Beginners playlist. and it has 32 videos. Once you're in here, you will see all the videos on the playlist. For example, how to simplify your TradingView chart, how to set TPs on TradingView, back testing on TradingView, how to do multiple time frame analysis, how to identify key levels. So everything's here, and I try to keep it as organized as possible. But yeah, I really think that's going to be all for today. I guess we can just quickly look at Euro USD since we've been here. We can take everything that we've learned and see how we think the market's going to play out. I'm never in no rush to take a trade, but if I see something good, then I see something good. But I'll actually let you guys go ahead and analyze this. Do gaps come in from global trading? Gaps actually come in where it's usually a bank or a major institutional player that has a specific goal at manipulating the price. Like price just literally moves so fast because they want to take out a bunch of orders to shift the way the market is going. Like those people are called market makers. Like we're not market makers, we're just retail traders. But it's another thing called inducement, which is very similar where they'll create these huge moves. Those large candles you see are usually not from regular traders, right? They're usually from major financial institution. They'll do that on purpose so that they can, and this is where the fake outs come from. They know a lot of people are going to set their stop loss at a certain level, so they're going to create this huge move to take out that stop loss completely and then collect all that money and then do the same thing going the other way, right? So it is a way of manipulating the market a little bit and push people to make decisions that they wouldn't usually make if the market was moving more steadily. Um, but yeah, I want you guys to go ahead and analyze your USD, and tell me everything that you see happening right now on this chart. We already have our previous lines of support and resistance. So anything that you notice about what's happening on the chart, what's happening on the stochastic, what's happening with the candles, what's happening with momentum, just go ahead and start dropping your notes in the chart. And then by the end of that, you guys should have a know what to do or have an idea of what you could potentially do in this trade. So anything you see right now, just go ahead and leave some comments in the chat. And then that will be all for today. Breakout at 3 blue candles is starting to break structure. Yes. Yep, it is starting to break structure. But we would need to confirm that with the retest. What else are we seeing? We talked about the candles, we talked about the structure, we talked about the direction. The stochastic has the blue over the orange. The stock is facing up. Yes, yes, yes. Yes, yes, yes. To all of this. Right? To all of this. Right? We also have a tweezer bottom here. Right? Somebody said we have the 3 candles here. We also have actually have a little gap right there. So it could continue to go up or it can push back down to between 108.23 and 108.14. What else do we have happening here? We have previous resistance becoming support right there, starting to face up and above 50. So far this is looking like it could be a potential buy. This is only on a 15 minute. We can look at it on higher time frames, and let me take some of this stuff off. We can look at it on higher time frames to see if we get those same confluences. Of course, once you can see the higher time frame, you may say, okay, maybe I want to wait until the next candle opens so I can see if I'm getting that 3 candle bullish momentum, right? Maybe I want to wait until 9 a.m. so I can see if the candle breaks the previous high, or I want to take this. He said looks a little bit sketchy, right? Once you start to get to those higher time frames, you get more information about what's going on. Then we get to the even higher time frame, right? What do we notice here? We see I see a fair value gap between here and here. So the market could still come down potentially as low as 107.93, which is about 23 pips below. Looks like it's going to sell. It looks like a lot. It's giving on a higher time frame. We don't really know yet because we have a resistance here. It was a break of structure, but it's not retesting above it yet. We do have a fair value gap here, right? So I do think it could sell for a little bit. It could potentially come down 30 to 40 pips before it continues that buying momentum. We are getting pretty close on the stochastic here, but we want to trade what we see, not what we want. So It's pretty bullish at the moment. But we can also wait until we get additional confirmation on either a smaller or higher time frame, whichever way you're going to choose to trade. But thank you everybody for participating in today's class. If you are a visitor, thank you for coming and for spending some time with us today. If you want to join the class more often, or you want to actually start to take the course and see the course videos and really pick up the pace and learn this on your own, just really reach out to the person who invited you today and let them know that you're interested. What is the name of the video with the wicks? It's called something like liquidity. I'll post it in the chat after this, but it's literally called, if you type in liquidity, it has liquidity in the title, and it's a part one and it's a part two to that video. But I'm gonna actually start making new videos about it as well this week. So, but yeah, thank you everybody for coming today. I hope you guys enjoyed it. I hope you learned something. If you are a visitor, thank you for coming. And I hope to really see you guys again. Um, and that's really all for today. Have a good week, guys, and be careful because it is NFP week.